So we are going to start the second part of our lecture on statement of cash flow. So now we're going to talk about what is an annual report. Annual report includes financial statement, and it provides a comprehensive picture of company's operation, risk it faces, operating and financial performance. So basically, annual report has a summary of information that comes in addition to financial statements. So the pieces of paper that you're going to find in the annual report contains management discussion and analysis, auditor's report. It comes directly from the auditor. Management discussion and analysis comes from the CEO, CFO, and management's report about the current operation and the future operation. And there is a report from board of directors. So that's basically the information that we have on the annual report. Now we're going to discuss each of them in detail. So what is management discussion and analysis? It required part of the annual report. It provides information necessary to understand the entity financial condition, changes in financial condition, and results of operation, basically assets, liability, equity, income, revenues, and expenses. The SEC specifics. SEC is Securities and Exchange Commission. Exchange Commission. These financial reports of all the publicly traded company stays on Securities and Exchange Commission website, and it has a database called EDGAR. And you can go to Securities and Exchange Commission, you can go to EDGAR, their database, and you can find any annual report for any publicly traded company such as Walmart, Microsoft, Google, and whatnot. So the topics that they discuss in management discussion and analysis about the liquidity, capital resources, results of operation, which is basically revenues and expense, off balance sheet arrangement, the information that is not included on the balance sheet, disclosure of contractual obligations to vendors and employees and customers, and critical accounting policy. So all of those things are discussed here. Management discussion, why we are doing it, what we are doing it, how is it going to impact the future of our business. The next thing we're going to talk about is the auditor's report. Is an examination of financial statement, income statement, balance sheet, and a statement of cash flow, and a statement of retained earnings. Also the notes. Auditor attests to the fairness of financial statement. Basically, auditor says there's these financial statements are fairly representative of the health of the company. Means if they are saying they have a revenue of $1 million, they have a revenue of $1 million, and if they are saying they have a liability of $2 million, they have a liability of $2 million. For public company, the auditor must also test the internal controls. So what are the internal controls? I'm sure you have discussed internal controls in Accounting 2301. Internal controls are policies and procedures that a company employ in order to protect their assets, in order to protect their operations, in order to protect, for example, the cash they have. So all of those things, and increase the effectiveness there. The SEC requires all public companies to conduct annual audits of their financial state. So all the annual audit happens every year for each publicly traded company. Private companies can also have audit done every year, but they are not required. Most auditor reports is nearly identical because report must be in compliance with the standards set by Public Company Accounting Oversight Board. One more thing about the Public Company Accounting Oversight Board. This is a organization that audits the auditors as well. So auditors audit the businesses, and Public Company Accounting Oversight Board audits the auditor. So if an auditor auditing 100 publicly traded company, they're going to be audited by PCAOB every year. If they are doing around 50, it would be every 3 years. The firm may issue audit report. The firm here means the CPA firm. Issues auditor's report on the effectiveness of internal control as a separate report within the annual report, or include with the opinion regarding the presentation of the financial statement. What it's saying that Audit report could be two. One, audit report on the financial statement, and the second, audit report on the internal controls. Or an auditor can combine both reports. All right, the next thing is management report. The management of a publicly traded required to provide two letters in the annual report. A letter stating its responsibility for the financial statement. This letter first goes to the auditor and then it becomes a part of the annual report. The second letter providing an assessment of the effectiveness of internal control over financial reporting process. What they are saying that the financial statements are the responsibility of the management, means the preparation of the financial statement is the responsibility of the management. Auditor do not prepare financial statement, they examine financial reports. The same thing, the implementation of internal control, the effectiveness of internal controls is the job of the management. The only thing auditor is going to do is going to study the effectiveness of internal controls. Management responsibility for financial statement. The annual report form is called 10K for a publicly traded company, must include the following. Officers have reviewed the financial report, means officers means the CEO and the CFO. So officers mean CEO and CFO. The financial statement do not contain any material omission or untrue or misleading statements. So what they are saying, that the CEO and CFO are saying we did not lie in these financial statements, or these financial statements are true, because the job of the auditor is to present an opinion on the financial statement. The auditor does not check every single transaction. The auditor checks only a sample of a transactions. So if there is anything accidentally overlooked by the auditor is not responsible. The responsibility lies with the management. The financial statement fairly present in financial condition, results of operation, financial condition, asset, liabilities, and equity, which is a balance sheet, results of our entity, basically the income statement. Officers are responsible for and evaluated the internal control, means the implementation and the evaluation of the internal controls are the job of the officer. Again, the CEO and the CFOs are responsible. And auditor job is to just examine their effectiveness. The annual report of a publicly traded must include the following: a list of deficiencies in the internal, if there is any. If there is any deficiency, then it should be listed. Information on any fraud that involves employee who are involved with internal activities. So what does it mean by fraud? Employees and internal activities means if as a CEO and CFO you have found that some employees were involved in the fraud, so what you need to do, you need to let the auditor knows and let discuss in this report, and also what you have done so far to make sure that this would not happen again. A discussion of any significant changes in internal control. If you have made any, say for example, you were using ERP system, say Oracle. Now you are moving to a different ERP system, say Microsoft system. So you need to mention all of those things. Suppose your payroll was done internally and now you have outsourced your payroll to ADP. These are the significant changes that needs to be discussed. Now the next thing is management report on internal control over financial reporting. This includes management responsibility for establishing, maintaining internal control over financial reporting. So that's the job of management, to establish and maintain. Assessment of the effectiveness of the company's internal control. That's also a job of the management. Identifying the framework used by the framework means what organization, rules, and guidelines you have used in preparing these internal controls. Auditor of the company's financial include in the annual report has issued an attestation to report on management assessment. What you are saying that in this point, the auditor needs to chime in and say, I have read all the information provided by the management regarding the internal control over financial reporting, and I did not find any issues with the internal controls over financial reporting. Board of directors. Public entity must provide a disclosure of the members of its boards of director, a body that oversees the activity of the company. So board of director has a fiduciary duty. What kind of fiduciary duty? As you know, there are 15 to 20 people in the board of directors. These 15 and 20 people, most of them are shareholders. But a company may have millions of shareholders. So the millions of shareholders select, sorry, not select, the word is elect. So the shareholders, the entire population of shareholders elect these 15 and 20 people. These people, on the other hand, select the CEO, CFO, COO. They also hire external auditors. All right. Ideally, there is an internal auditor which is part of this group. So internal auditor most sometimes also report directly to the board of directors. So that should be done that way as well. Okay. So the disclosure includes names and the principal business activities of the entities employing the members of the board. So you would tell in the board of director report what are the names of your board of directors, what are their experience, what they have done, and what they are currently involved into. Okay. The next thing we're going to talk about, again, the indirect method. As I said, indirect method begins with the net income from the income statement and then reconcile the net income to the net provided by the activities. And the adjustments consider depreciation expense, unrealized gains and losses, change in operating assets such as account receivable, inventory, and liabilities such as increase in accounts payable or decrease in inventory. So we're going to stop here, and in the next topic we're going to talk about direct method and some other things related to statement of cash flow.